with a 50 bips rate cut already implemented by the RBI, and then there's so much uncertainty across the globe, what is the view right now on how India is going to be shaping up?
Thanks for having me on the show. I guess in January when we spoke post the upgrade, it looked like an impossibility to expect any degree of positivity on the Indian market because the pushback was very high. Macro was very weak in second half of last year, and as you know, I was very cautious in second half of last year. My broader thesis to a large extent, interestingly, remains intact even today. So what it means is that I still have a positive outlook on Nifty with a 26,500 target. The perspective is very simple that macro for India, as I had indicated in January, had bottomed out. And more importantly, we are continuing to see some degree of improvements in macro. The second perspective was that I was actually expecting around 50 basis points of rate cuts, but that has already happened. And I do believe that, as you mentioned, uncertainty globally is actually good because that could lead to more rate cuts. And more importantly, from a regulatory standpoints and RBI in terms of what they're doing to ease liquidity in the banking system as well, it's a very positive, in terms of how things would shape up through the year and early next year as well. The other important point is that both capital expenditure, which I was indicating, and consumption will be slightly better than last year. So, at the rate of change, of course, is going to be positive compared to what it was last year. But all these factors I've told you is not going to be so amazing that we can think of 25 or 30% returns from India, right? So this is the only limiting factor for me.